Hello. Japan has been in the news recently, thanks mostly due to evidence that the so-called Abenomics policy is starting to show results. And this is something the country has been forced to accept over the last few years. Well, joining me in the studio to discuss this and the wider financial markets in Japan is Francois Nordhof, Global CIO and Head of Portfolio Management at BCP. Francois, welcome.
Hello.
Now, what opportunities for investors lie in Japan's financial markets if you compare it to Western financial markets, for instance, right now?
Just right now, indeed, fixed income investors are not going to be very lucky if they are going to invest in Japan due to the fact that the interest rates levels are that low that you can not have the slightest yield on your fixed income portfolio. The alternative to fixed income is indeed equities. For the time being, you notice that the performance of the stock market in Japan was very poor in the first quarter. It's one of the worst in the developed economies. Therefore, the issue is it now really the right timing to enter the equity market.
Okay. We'll come on also to the Nikkei later on. Regarding the Japanese economic recovery, we've seen that the weak yen do sort of very little really to bolster exports. Do you think now's the time perhaps that Japan should start considering reintroducing its nuclear capabilities after the Fukushima shutdown?
Yeah, the huge problem actually in Japan is actually that quantitative easing had a massive impact on the currency, which was weakening very strongly last year and helping actually stock market. This was the only issue because when we look to the global macro picture, then the picture is slightly different. It's not euphoric at all. I mean, imports were rising by more or less 30% in the energy sector, also for very specific reasons. But exports were only rising by a high single-digit figure. Therefore, the trade balance deficit increased massively, which was previously the strength of the Japanese economy. A strength became a weakness. That's a strong issue. Now we know that things are probably going to turn around, means that the Japanese authorities have really the sentiment they cannot survive in the long run by prohibiting to produce electricity by nuclear station, and they will be obliged to accept the restarting, if you want, of the nuclear power station in order to reduce energy imports.
Okay, let's look at VAT, Francois, because I know last week it was introduced, it was hiked even on par with Swiss levels.
Exactly.
Do you think that's going to do more harm than good?
Last time in Japan we had a VAT increase was in 1997. And in 1998, GDP contracted by more than 1%. So we do not understand why the situation should be different in 2014. We should have more or less the same impact. The difference is actually the weak currency who should, in the long run, compensate this impact of VAT increase. But the VAT impact will be huge as the private consumption in Japan, like in other Western economies, represents more than the half of the GDP. Therefore, we can also have fears that actually consumer anticipated the VAT increase, and therefore by anticipating the VAT increase their own consumption before the hike of the VAT. Therefore, something is going to miss on the consumption sides in 2014. That's for sure.
Okay, thank you, Francois. Thank you for that analysis. Thank you for coming into the studios as well once more.
It's been a pleasure.
That's all for the moment on Dukas Copy TV. Stay with us. We'll have more interviews for you later. But for now, bye-bye.